Hi, Victor. Thank you so much for coming to the Investor Talk series. How's it going?
Fantastic. Thank you, sir. Thank you for being here.
Thank you so much for your time today. So, we do the Investor Talk as a tool for founders that join EquityMatch.co accelerator. We are not a pure accelerator, we are something different. We try to innovate the way startups are accelerated. But this is part of our library. We are building a pretty strong library and we put in investors talking about the way how do they invest money for founders understanding what is behind venture capital from angel to accelerator to venture capitalists and so on and so forth. As we start, would you like to give an introduction to yourself, Victor?
Yes, of course. I'm 33 years old. I started quite early in my entrepreneurial life. I started already as 11-year-old to import stuff from China and sell it to the neighborhood. So I was already in very early stages into business and into trade. I was born and raised in Denmark. My mom is Polish. My father is from Iran. But it's so big mix. But I speak all languages and etc. So it always gave me like a cultural understanding of many cultures, etc. And every language you have, the more options you have as well. And then, of course, it continued, and I started in sales. I did very, very well in sales. Then I went into accounting and legal as education form, and I started my own accounting and legal firm back in 2016. I grew it into around 70 employees on payroll, and then I made a humble exit back in 21. And from there, I started investing in startups, in movies, and in real estate.
That's great. That's a very good background from an investor. So I do believe investors who invest in venture capital in startups must have an entrepreneurial background. If you are an analyst, if you come straight from banking, investment banking, and you never had any startup yourself or never had an entrepreneurial background, it's very difficult to advise investing founders when you actually are not an entrepreneur yourself. That's the big problem in Europe. Many, they are still bankers, they are still investment bankers, analysts, they are not entrepreneurs. They cannot understand the pain, the journey
Oh,
behind.
no, it's also because they don't take risks. I think we're
No,
going into startups, it's gamble, and you high risk, high gain. So you have to be willing to take some risk at least, and then you'll be better in calculating your
yeah,
risk, of course.
I, I make you laugh, but Equity Match is my sixth startup, number six, and I
Aha.
sold all of them. I sold all of them except one. They had to close, but I mean, failure is part of the journey. I'm very happy I had this failure because I learned a lot, a lot, a lot. Now,
Sometimes you win, sometimes you learn, huh?
yeah, and now I'm doing Equity Match. So I've been talking to a few investors because actually I'm raising myself 500,000 to take the second version out of the ground, and they come to me and actually some of them they piss me off because actually they try to teach me how to start up. I never done any in your life. So one of them I say, okay, sir, but how many startup you done in your life? Nothing. How can you tell me how to do this? Yeah, so with experience giving tickets, that's not there is nothing you can do. I'm sorry. So this is something that is missed in Europe. Anyway, let's hope we can improve. Uh, where is the sector and the stage and also the geography that you prefer your startup B and R?
Yes, good question. So I started in Denmark, of course, and then I grew in with my accounting company. I grew into Bulgaria, and I had also a department in Sofia. And once I went into Sofia and the Balkan markets, I could see that the Balkan region really intrigued me in many ways because you have a lot of competence. Its labor cost is still, at a place where you can actually, how can I say, scale faster with less capital. And it's not always it's going to be like this. So I saw a big opportunity in the Balkans, which is definitely like Serbia, Bulgaria, Macedonia, like these countries. It's very intriguing to me. And then I'm located now in Tbilisi, Georgia, where the whole Caucasus, like with Georgia, Uzbekistan, Kazakhstan, and all the stans, are very, very interesting to me as well. So I think these two regions is a place that I prefer going in with investments these days.
That's very peculiar, very different from that investor I've been interviewing so far. Uh, Now, in terms of the sector, actually, where do you like to invest? You told me you invest in real estate, for example, right?
Yes, real estate is, of course, it's like security. It's something you need to do in some way. Like I think if you made your first exit, you should probably allocate just a little percentage of that into real estate. It's just my opinion, and I think most people who I know who is very wealthy, they did the same. And there's nothing special about real estate. It's a very boring business, to be honest. But it's just like Excel sheets. You buy a square meter and you hope that it will appreciate, and you can rent it out. Then you have some rental income, and so it's boring business. So yeah, I think I allocated a small percentage to real estate. Yes, but that's made of security, so I don't just spend all of it on gambling with startups. So that's one reason. But sectors in general, I don't have a specific sector as long as it's not like a patient investment. For example, anything regarding pharma is always very patient, is not my type. I like more dynamic investments where I can see within a year or two if things are going great or not. And for that, I think it's mainly dependent on the founders rather than what it is, because I rather want good leadership and a semi-good product than I want semi-leadership and a good product.
That's right. Do you invest in solo founders? That's I try to. Many venture capitalists they find pretty scary investing in solo founder because the pressure only one person because if they get sick maybe everything is over. But on the other hand, the biggest entrepreneur today on earth is pretty much a solo founder.
Yes, it's always the question that comes up, and I know if you ask a VC, they don't invest if it's only solo. Yeah, so but I would say it doesn't matter even if it's two founders. Usually they are if they're compatible. If one of them are good at sales and the other one at operations, if one of them somehow goes under, then what do? You still are missing a missing link. So it will still kind of you will still feel it in the business in some way. So it's a hard thing to like. You just have sometimes you have to have a little equation of luck, and you do have to kind of feel your gut and then say, okay, I trust this and just see it as it is. It's an investment. You risking something to gain a reward. So I usually don't necessarily, I don't have like a requirement that you have to be two or three founders. It's better, but I don't have the actual requirement.
Now, in terms of, you, I suppose you invest early, right? So in investing early stage, it's where the risk is very much so is the highest. Now,
Yep.
what you see, what you're looking for in startups when you invest in them. So you weigh the team, the product, the idea, the market, the execution, if there is any any traction. Sorry. So what you're looking for?
Very good question. So I think I'm a little lazy on that part, mainly because I receive maybe 3 to 5 pitch decks per week, approximately these days, and usually to save time, I basically skip all the pages and then I go down directly to the founders. I don't even know what it is. I just go to the founders and the team, and then I look for one person who can sell with some sales experience. I go in and check their LinkedIn if they have some great track record in selling. Then I look for one operational figure, somebody who has great track record in operations. And the rest doesn't matter to me, honestly, because every specialist can be bought. You cannot buy a salesperson or somebody who can operate. It's very hard to find. So I think this is the first. Once these two are located, then I look for, then what is it? And then I look for then I look for the business model, and I look for how much skin they have in the game. So I would say, if I should sum it up, I would say sales, operation, how much skin do they have in the game? That they put in some money themselves. This for me is a very big thing, because I don't like just to hand out money for anybody or fundraise or help co-invest or syndicate in investments where the founders don't put in anything themselves.
No, of course.
Either they put in, so a skin in the game is very important. And of course, the regular stuff like business model and a go-to-market strategy. But the most important thing, because I invest early stage, which has the biggest risk, the biggest risk, I'm very, very keen on that they have to have committed LOIs. So if it's a pre-revenue, they have to have like a committed letter of intent in terms of a company or a consumer who will buy their service or product. If they usually don't have this, I ask them to get it before I would put my money, usually. So once they have the software finished, or once they have the factory, or once they have the product or whatever, then they have somebody who will buy and pay, like a committed contract. Even though if the company ID is not registered yet, etc., it doesn't matter to me. I need a committed letter from a buyer to let them show me that there is some sort of sales. So we don't just start and we hope for the best. I don't hope. I want to calculate my risk.
Do you invest fully remotely? Means, do you want to see face-to-face meeting your funders, or you can go straight to video calls up to the end?
Well, I think face to face is better in many ways, of course, but in today's world, I see it as a nice to have. Like, you don't need it; it's not a need to have. So for that reason, I don't need to travel to meet them, etc. I will do it if it's necessary. Let's say I have to come there for some reason and establish the company. I need to be there myself physically with a notary or something. I will be there, no problem. But I usually don't need it. Like, all my things are remote, basically. So it's a nice to have, and I only go for a need to have.
After investing, do you meet your funders? Do you get in touch with them? Do you ask them to report to you any, for example, quarter?
I have, of course, very, very, how can I say, very strict reporting structures set up. So I make sure that the KPIs are intact. And as a minimum, one time every 2 weeks, I need, for example, the bank statements. I need everything, like the statements of the tax, just to see everything is as it should be. So I have I think this came from my accounting background, that I need to see the numbers as well, because numbers don't lie, people do.
Exactly. That's completely sure. Let's say you have 5, 6 startups in your portfolio. Do you try to match them, to give them some kind of, to try to collaborate? Between them.
Yeah, I'm a very big fan of synergy. So if there is any synergy, of course, why would I not connect them? But I don't see it as a must. Like, it's not like just because I can be a minority shareholder here and a shareholder there, and if there's a synergy, it makes sense. If not, then I don't need them to know each other, basically.
In your investments, do you invest alone, you co-invest, or you take any lead? Although at the very early stage, taking lead does make that much sense in terms of angel investments, but sometimes you can co-invest with others, yeah?
I do all, actually. I'm very open. Like, usually, because my ticket size myself is up to 100K usually in startups. And if the startups needs 300K to get going, or 500K, usually I co-invest or make syndicates. And I also help them fundraise, which also allow me to get some sweat equity on top. So I don't mind that at all, actually.
In terms of how you get involved with them, let's say you invested already, you said already, but you help them also to fundraise, maybe find the other investors that can follow up you, or they can come to the next round. So you help them in this way.
Yes, but everything has a price. So if I help them with this, of course, I take some more sweat equity warrants on top. I usually do like this. Yeah.
I mean, I always try to talk to investors about pivoting. So you come from an accounting background, you're pretty meticulous when it comes to numbers and reporting and so on and so forth. But for example, in terms of funders, how can I say? In terms of pivoting, how do you try to make the fund understanding that when things are not that great, okay, maybe it's time to change? Because many funders at the very beginning, they believe that pivoting is pretty much the proxy of failure, right? So
Hmm.
they don't want to give up because they believe so much in what they're doing. They feel they start up like their baby. So why should I change? I will try until I can. But sometimes it brings to failure. So do you help them, for example, understanding when things are not good enough to change?
My mantra is always that: do you want to be right or do you want to be rich? It's a very simple question. And usually, if what they're doing and the road they're taking is not allocating any capital into our bank accounts, then usually I say, well, now you're trying to be right. Let's try now to be rich. Usually, so I would say I'm pretty fast in catching the founder if I see they're going into a direction that I have tried before and failed at or something. But of course, every founder has an ego. and every leader has an ego. It all depends on leadership. So I believe that there's a lot of, as an investor or a board member, I believe there's much more in terms of leadership, or I would call it coaching, or like there has to be some sort of respect also in terms of that some investors actually have at least a background or a domain expertise. I think, but in general, I think do you want to be right or do you want to be rich usually have helped so far. So I have not seen it not help until now, actually.
I mean, it's not easy to find founders big-headed at the same time good listener. It's very complicated. Many times when you are so proud and had this pretty much big ego, you try listen very little and listen yourself, which is wrong. But it's not that simple. But you're right. I mean, they must be coachable. Otherwise,
They have to.
huh? I had to.
They have to. They
Mm.
have to. Is I think it's, but it's also, so. One thing is if you look at the investment, but as I said, the first thing you look at is the team. Then you look for their expertise. Once you know their expertise, you have to look for them as a person. Are these people who's going to be dumb stubborn or just stubborn? Because they have to be stubborn to make it, but they cannot be
Correct.
dumb stubborn. And of course, many people, they also camouflage intentions, maybe, and maybe people are very good at maybe not showing their weakness, or how they work under pressure is also not easy to see sometimes. Sometimes you need to get to know them, but there's not so much time when they're in like a pre-seed round, of course. So you take a risk, but you have to be good at judging a character very fast. And I think this is one of the elements that I see many investors actually lacking, is the way of judging a character.
Yeah.
I was in sales before accounting for many years, since I remember. So I believe I would, it's hard to say humble, but I believe my best skill is actually people. And so I think I'm very good at kind of judging a character on, okay, where will I have issues with this founder? In which domains will I have issues? Okay, is those issues something I can fix, or is those issues something that he will just run me over, and then I have to hope that his direction is better than mine? So I think this is yeah.
I mean, you're giving that the money, and maybe you need to spend 2, 3 years with them. So if you don't get along, it's going to be a problem. And
Yeah,
it's like a marriage, right?
100. I think expectations and compatibility and respect. If
Yeah.
your wife or your spouse don't respect you, also the marriage is done. So I think also there has to be some professional respect. That is not just money. I came with trust. I trusted you in your vision. So I think there has to be some sort of old-fashioned respect, like in 1930s.
That's true.
Where a handshake was a handshake.
That's very true. Uh, Let me ask you, why have you decided to become an investor? With the money you got from your exit, you get done many things. Why did you decide to put your money in startups?
I can't help it. It's probably one of the things I love. I love entrepreneurship in general. I love to see people win. It doesn't matter if it's me or somebody else. I just love winning. Everything related to winning or growing or scaling, it just gives me energy. But I would also say it's a natural progression, natural evolution of making money. Like if you made an exit, like you start a company, you do it. Some people have different reasons for doing it, but one reason is definitely to make some money. Once you made that, you have to kind of deploy that capital into something else to make the capital create capital for you instead of time creating capital. So I think it's a natural progression, and it's very rare I see people making an exit or people who has saved a lot of capital who don't deploy it in some companies or startups or stocks or whatever it is.
It does. I mean, you got the good experience as an entrepreneur, a successful one. You've done your exit. Do you spend time to the founders to make them understand the way to get right, to succeed, and one day to sell?
Yes, I do. I don't force it. I see it when they're kind of calling themselves usually, because usually the calls I get is not the good calls. Usually the calls I get is that we have a problem or we're running out of liquidity because we got this order of 400,000 euros, but our capacity only accepts the 300. We should buy a new machine. So it's usually they ask. So I usually get the problem calls usually. So it is what it is. It's also like being a founder in your company. It's very rare I get the good news.
If you had 3 startups, almost the same, Very strong team, very strong market in terms of size, a good business plan and execution plan. But you can only invest in one. What are you going to pretty much looking at to get, okay, I'm going right, not left, not in the middle because I can only invest in one?
I mainly look at founders, mainly because sometimes founders, they start a concept. And if that concept looks like it's not going to work out, and you can see on the liquidity budget that we're going to be out of money in the month 9, and we don't see any MRR coming in at the same pace, then usually they can switch the business model. We can find a new, like a new business within the business, and good founders will always find a way, kind of. So I really believe that finding the right founders, you always find a way. And usually a startup after 2 years is not the same thing as you invested in. Usually it changes many times
You know,
because you find out there's a better way, or a sub sector you didn't notice in the beginning, or whatever it is usually how it goes.
it does. When funders come to pitch to you, what do you expect from them? How they should pitch to you?
I expect they're prepared. I really expect that they know their market. I expect that they know their strengths and also their weaknesses. And they have to be honest about them. The founder who think he or she knows everything usually is a big red flag to me. I don't mind founders being very confident. I don't even mind founders coming in being very arrogant. This I don't mind, as long as they can back it up. Even if a founder comes to me and say, I'm God, I'm like, okay, no problem. Back it up. Show me your God. Like, this is very important to me. So I don't mind. I don't mind arrogance. I don't mind if people are confident. This for me is only a plus if they have something that can back it up. I think this is yeah.
In your opinion, how founders should approach a venture capitalist?
I would say they should not approach a venture capitalist because usually they're not so involved. Usually, I understand that they need it at some point, but I believe the venture capitalists or the VC should approach the founder. If your service, if your startup is good enough, you will be noticed and they will contact you automatic. I would never go there, honestly. I would because usually you get the funding, but you don't get the domain expertise like they promise you. You don't get the help that they promise you. It's just capital and it's a money game. And usually I believe you get much more out of a private investor or similar, and connected with some growth banks in many countries, you can really get far, I believe. And so I believe in, that's also kind of skin in the game, going out there, getting the investments from private individuals, high net worth individuals who are open-minded, even angel investors, and connected with some growth banks in every country. Most of them are connected to some, and bootstrap the rest, like show that you can actually handle it. And once the VCs come to you, you have to decide whether you want to scale fast or not. But then at least they came to you.
Now, do you believe or do you consider IP mandatory for you to invest in any? Let's say if you want to invest in hardware, IP is pretty important. If there is no IP, are you going to give them the money?
It depends if their plan is to have some sort of IP at some point. So if they cannot have it in the beginning, I had a case where they had a very good idea, but they wanted to test it, and they didn't need so much capital to actually test it. It was some kind of prototyping where they could white label a software and show me that they could get clients. And once they had like an MRR on 10K per month, then they would develop their own kind of and switch. And for this, I could be open, even though they don't own the IP in the beginning. Because the reasoning was good and they had a plan on how to get it. So it's not mandatory, but of course, if you invest, you want the multiple to be funny at some point. So, yeah.
There are some business where IP pretty much matter, but anyway, sometimes you can always stay software, for example, you can stay away some kind of marketplace. You don't need at all. But there are some that actually you need. Where do you see the money be deployed the most in 2024? Where do you see the sectors? Taking away AI, because we always talk about AI, but AI enable business, but it's not the business, right? So where do you see the sectors most trending in 2024? Deep tech, for example, I don't know.
If I knew the answer, I would have been a billionaire by now. But so if you know somebody who knows, please let me know. I will be the first one. But sector is so subjective. I think it's more interesting to look into regions, and then in those regions you can find out, because some regions are, maybe you can say, e-commerce. In Scandinavia, for example, where I grew up, e-commerce is quite advanced, and but if you go to Balkans, the e-commerce is maybe 6 years behind. So in that way, e-commerce could be trending. That could be a very trending sector. If you look at the East, if you look at the many Southeast Asian markets, real estate is very interesting because more people are going there as well for digital nomad spaces, etc. Like these co-living spaces are very interesting as well, and you see them in Bali popping up like everything. So it's just an example. So I think it's more region based. If you look at a global point of view, is what everybody says. And I know you said you could say AI, but AI definitely. I would say farmland in general, everything related to food. I would say anything related to health could be very interesting. Anything related to sleep. We have biggest, I think, of course, many people speak about mental health, but I think it's a bigger issue in the West than it is in the East, from what I can see. So and I don't think the solution's out there. I don't think software will help it. It's a much bigger problem than just software helping people who are dealing with mental health, in my opinion. But okay, good times create weak people. So this probably also have something to say. And I believe that it's a privilege to be depressed in these days, because you have the time to think that you're depressed. This for me is a privilege. But okay, with all respect, of course, some people have better reasons than others, but 90% is probably just because they have way too good life and don't have perspective. I don't know if we're going to cut this one in the podcast because I'm going to be assassinated, but okay, it is what it is. But with that said, sectors, farmland, I think is very interesting. Warehousing in general, like more warehousing for e-commerce businesses. So like logistics centers, very interesting. Trending, I would say, in many regions. And I would only look for regions like Balkan, Caucasus, Southeast Asia, and many African countries could be interesting. The rest is already made. I don't know how much you want to saturate the West even more.
Yeah, no, it's pretty saturated already. You're right.
Yeah.
If you can give, let me close with an advice. If you can give any advice to all the founders, okay, watching today, how actually approach a venture capitalist, how to try to get investment from the venture capital. I mean, everyone invests in startups. That's what I mean when I say venture capital. What you can tell them?
I would say usually they don't care about profits. They care about market share. So if you can show them a model, Amazon is the best example. They didn't make money for 20 years. So I think if you can just show them that you have something that can capture market share in a market, like, or you can make like a duopoly into a oligopoly, this is very interesting, that you can become like a competitor. Like I would say, if people look into many monopolistic markets, you can go in and be the joker. I think you will have a big chance for the VC's interest usually. So market share, don't look for profits, look for market share if you are going for the VCs. And you also have to ask yourself the question, if your plan A fails, what is your plan B? Because they will have all the questions for you. They will be like, okay, what if this happens? Then what do you do? At least be prepared with all the plan B and plan C on what you're going to do. So if this happens, we do this. If a new corona happens, we do this. If this happens, we do this. Then what will they say? They will just say, where should I sign? In my opinion.
Victor, thank you so much for coming to the Investor Talk series. It's been a very good pleasure for me. Thank you.
Thank you so much. Thank you for having me. It's a pleasure being here.
Thank you.